All right, get ready because today we're going to take a deep dive into a topic that's, well, maybe not the most exciting, but definitely important if you're thinking about leaving Canada.
Yeah, taxes. Not exactly a party topic, but understanding the tax implications of emigrating from Canada is essential.
Exactly. So we're going to break down the official guidance from the Canadian government website.
That's right, we'll cut through the jargon and give you the need-to-know info to help you navigate this process.
We're talking about things like deemed dispositions.
Yeah, that's one that often catches people off guard.
Basically, Canada kind of considers certain assets as if they were sold when you leave.
Even if you haven't actually sold them.
So let's say, for example, I have a pretty impressive collection of vintage hockey jerseys.
Okay, so you're moving to, say, Italy.
Right. Picture me sipping espresso in Rome, but the CRA is still back in Canada thinking about my jerseys.
Exactly, because those jerseys, even though they're packed in your suitcase, are still considered assets for tax purposes.
So do I need to, get them appraised and figure out their market value before I leave?
Well, if the total fair market value of everything you own is over $25,000 when you leave, then yes, you'll need to report these deemed dispositions.
Okay, so mental note.
Mhm.
Got to take inventory of all my stuff before I head out.
Definitely.
Now, before we get too deep into the specifics of what needs to be reported and all that, I think it's important to understand when Canada actually considers you a non-resident for tax purposes.
Right. This is where things can get a little tricky. It might not be the exact date you physically leave.
Oh, really?
Yeah, it could be the date your family leaves if they're going with you, or the date you officially become a resident of your new country, whichever of those comes last.
So even if I'm already, enjoying the beaches of Bali, Canada might still consider me a resident for tax purposes if my family's still wrapping things up back home.
Precisely. There are some unique situations, though. For instance, if you lived in, let's say, Australia before coming to Canada and are now returning to Australia, in that case, you're typically considered a non-resident of Canada from the moment you depart, even if, let's say, your spouse stays behind temporarily to sell your house.
So it's not as simple as just hopping on a plane and saying, see you later to Canadian
Yeah.
taxes.
Nope, not quite that easy. There are a lot of moving parts.
It sounds like figuring out that official departure date is pretty crucial.
It's essential because it affects everything from those deemed dispositions we talked about to your residency status and your tax obligations going forward.
Okay, so let's talk about the big question that I'm sure is on everyone's mind. Do I still have to file a Canadian tax return after I've left?
Well, I wish it was a simple no, but unfortunately it's not always that straightforward.
Figures. So what's the deal?
If you owe any taxes to Canada, then yes, you absolutely need to file a return. And even if you don't owe anything but are expecting a refund, you still want to file to get that money back.
So even if you've started a new life in a new country, you might still have some Canadian tax obligations hanging around.
Exactly. It's best to be prepared and informed.
What's the best way to stay on the right side of the CRA after you've moved?
Well, you always want to inform them, the CRA that is, about your departure date, even if you don't think you need to file a return.
Why is that?
It just helps them keep track of your residency status and avoids any potential issues down the road.
Makes sense. Now, let's say we've officially become non-residents. What about income we earn after that point? Do we still have to report that to Canada?
This is where it gets interesting. There's a difference between income you earned while you were a resident and income you earn after becoming a non-resident.
Okay, so what if I'm living in Tuscany, let's say, but still receiving rental income from a property I own back in Canada?
That rental income would be considered Canadian-sourced income, so yes, you would still need to report it on your Canadian tax return.
So even though I'm living La Dolce Vita, I still got to keep the CRA in the loop about my Canadian rental income.
That's right. It's important to remember that not all types of Canadian-sourced income are treated the same way for non-residents. Some income, like rental income, is subject to something called a non-resident withholding tax.
Oh, withholding tax. I've heard of that.
Yeah, and it's deducted right at the source. So in many cases, that withholding tax is your final tax obligation on that income. However, there are certain situations where you might be able to reduce your overall tax burden, and that's where something called electing under Section 217 comes in.
Section 217. Sounds a bit mysterious. What's that all about?
Well, that's a topic for our next part.
All right, so we'll unravel that mystery in just a bit. Stay tuned.
So we're back and ready to dive into that mysterious Section 217 we mentioned before the break.
Yeah, I'm curious about this whole Section 217 thing. You said it could potentially reduce my tax burden, so I'm all ears. It seems like it'd be easier to just let the withholding tax be the end of it?
I know, right? It might seem a little counterintuitive at first, but choosing the Section 217 can actually be a really smart move sometimes. Think of it this way. Normally, when you get that Canadian income, the kind we talked about, as a non-resident, the person paying you holds back some tax and sends it directly to the CRA. And usually that's it, you're done, no more taxes to worry about on that income. But with Section 217, it's like you're saying, hey, I'm okay with being in a higher tax bracket for now because I think I'll get a bigger refund later.
So, instead of just taking care of the tax right there, I'd be choosing to put it on my Canadian tax return and maybe even pay more up front. Why would I want to do that?
Well, the great thing about actually filing a Canadian tax return is that you can claim all sorts of deductions and credits, and those can really lower your total tax bill. So if those deductions and credits are bigger than the non-resident tax that would have been withheld, you could end up paying less overall, or maybe even getting some money back.
Oh, I see. So it's like a bit of a gamble, but I could come out ahead if I have enough deductions and credits. Are there any situations where choosing this Section 217 makes more sense than others?
It can be a particularly good idea if you have a lot of deductible expenses that are related to that Canadian income. Like, let's say you're getting rental income, but you also have a big mortgage on that Canadian property, or you're paying a lot in property taxes. Being able to claim those deductions could really make a difference.
This is starting to sound like a strategy game with taxes. It's all about planning ahead and thinking about the long-term impact.
Exactly. And this is definitely where talking to a tax expert who really knows about cross-border taxes is super helpful. They can look at your specific situation and give you the best advice.
Great point. Now, are there any other unique situations our listeners should keep in mind when it comes to Canadian taxes after they've emigrated?
Well, if you've ever used your RRSP for something big, like buying a home, or maybe you use the home buyer's plan or the lifelong learning plan to pay for education, remember those have special repayment rules even after you've left Canada.
So those repayments don't just disappear when I move.
Nope, they stick around. It's because those programs are kind of like borrowing from your own retirement savings, so Canada wants to make sure you're still on track to pay that money back, even if you're not living there anymore.
Makes sense. Got to keep the CRA happy. I'm noticing a theme here. Staying organized and being proactive with those Canadian finances, even after you've moved, is super important.
Absolutely. Figuring out all this immigration tax stuff might not be the most fun part of starting a new life abroad, but it's a really important step to make sure everything goes smoothly.
It's important to remember that this whole process isn't just about numbers and forms. Leaving your home country, even for an amazing opportunity, can be tough emotionally.
You're right, it can be a lot to handle. Saying goodbye to friends and family, getting used to a new culture, building a whole new life. It's definitely a whirlwind of emotions.
And then on top of all that, you've got these potentially complicated tax issues to figure out. It can feel a bit overwhelming.
It really can. So it's super important to acknowledge those feelings and take care of yourself during this time.
What are some good ways to do that?
Well, things like leaning on your support system, practicing mindfulness, and doing activities you enjoy. Anything that helps you manage stress and keep your well-being in check.
I love that you're bringing this up. It's a good reminder that this is a huge change, and taking care of our mental and emotional health is just as important as sorting out our finances.
Couldn't agree more. And if you find yourself really struggling, don't be afraid to reach out for professional support. A therapist who specializes in these kinds of major life transitions can give you some really helpful guidance.
This has been so helpful. I feel like I've learned so much already. Ready to move on to the last part of our deep dive.
Let's do it. We'll recap everything we've talked about and give some final thoughts for anyone who's about to embark on this exciting journey of immigration.
All right, welcome back to the last part of our deep dive on emigrating from Canada and, well, the tax stuff that comes with it. I gotta say, even I learned a few things today. Hopefully you're feeling a bit more confident about this whole process now.
Yeah, absolutely. I mean, we've really gone through a lot, haven't we? Like what it actually means to be an immigrant for tax purposes, those deemed dispositions that can sneak up on you, and all those rules about filing taxes, even when you're living somewhere else.
It's a lot to remember, especially while you're also trying to figure out like selling your house and saying goodbye to friends and all those other big things that come with moving to a new country.
Right. It can definitely feel like a lot to handle. But remember, our goal here isn't to make you into tax experts overnight. It's more about giving you the tools to make smart choices and to know when you might need to talk to a professional for help.
So let's do a quick recap of the main points. First thing, Even before you start packing, you need to figure out if you actually fit the definition of an immigrant, for tax purposes. It's not just about leaving Canada, it's about really showing that you've shifted your life to another place.
Exactly. Selling your house, moving your family, transferring those personal connections to another country, all of those things really demonstrate that shift.
And once you know you're considered an immigrant, remember those deemed dispositions we talked about earlier.
Hmm.
Basically, Canada looks at it like you've sold certain assets on the day you leave, even if you haven't actually sold them. And that could mean you owe some capital gains taxes.
Right. So knowing that official departure date is really, really important. It affects all sorts of things, like the deemed dispositions, whether you're considered a resident or not, and what taxes you'll need to pay.
We also talked about how even if you're living in another country as a non-resident, you might still have to file a Canadian tax return, especially if you owe taxes or are expecting a refund. And then there's that whole thing about how you only pay Canadian income tax on income that comes from Canadian sources, but different types of income are treated differently.
Right. And while it might seem like you can just wave goodbye to Canadian taxes when you leave, there are still some financial things you got to keep in mind. Like we mentioned those programs, the Home Buyers Plan and the Lifelong Learning Plan, that require you to keep making repayments even after you've left Canada.
Oh, and don't forget, most of those Canadian benefits and credits, like the GST-HST credit and the Canada Child Benefit, you can't get those if you're a non-resident.
And for those of you who are looking to maybe lower your tax burden on some types of Canadian income, we talked about that strategy of choosing what's called Section 217. It can be a bit complicated, but it might be worth looking into.
It all comes down to being prepared and knowing what you're getting into. I guess the main takeaway from our deep dive is that knowledge is power. The more you know about how taxes work when you leave Canada, the easier it'll be to make this transition.
Couldn't agree more. So as you're getting ready for your new adventure, take care of yourself, both practically and emotionally, and don't hesitate to get advice from the pros if you need it.
This deep dive was packed with info, and I know there's always more to learn with these kinds of things. If you're feeling curious and want to know more, definitely check out the latest government resources and maybe even chat with a tax expert who specializes in cross-border stuff. They can really help you figure out the details for your specific situation.
Leaving Canada is a big change, and understanding the financial part of it, especially taxes, is just one piece of the puzzle. But by being informed and prepared, you can approach this whole thing with confidence and excitement, knowing that you're setting yourself up for success in your new home.
Well, this has been a great deep dive into a topic that so many people don't really think about until it's almost too late. We hope you found it useful and, dare I say, maybe even a bit enjoyable. Just remember, this info is based on what we know as of December 30, 2024, so always double-check for any updates.
Best of luck in your new chapter abroad.
Until next time, keep on diving deep.